Good morning, everybody. I'm Nisa Amolis. I'm the managing partner at A100X Ventures. I also produce and host a television show filmed at the New York Stock Exchange on Bloomberg called The Business of Blockchain. Been doing that a long time, been in this space a long time. So very excited this morning to talk about the intersection of AI and blockchain, and going to kick it off to our panelists to introduce themselves. Carl.
Good morning, everyone. My name is Carl. I'm a general partner at Six Man Ventures. We're a venture firm that invests in seed and Series A companies, really focused at the intersection of AI and money. We have very deep roots in crypto and blockchain, but we see a much bigger horizon where we can actually start to help fintechs and other AI companies expand into on-chain capabilities. We've been around for about 6 years and a team of 5 people, mostly based in New York.
Hi, I'm Brian Trunzo, Chief Growth Officer of Succinct Labs. Succinct Labs is a cryptography company that specializes in securing, scaling, and making private blockchains, as well as digital assets. In production today, we have over 10 billion in total value secured across some of the most popular and well-used blockchains, from Polygon to Optimism, Base, Arbitrum, and Mantle. We are exploring the intersection of crypto and AI with some of the tools that we've built, and hopefully we'll talk about some of that today.
Hello, everybody. My name is Logan. I'm the managing partner at Frictionless Capital. We're an early-stage venture fund focusing on crypto and frontier technologies. We're based out of Miami.
Hey, everyone. I'm Michael, co-founder and CEO of Zero G. And it's kind of weird. I don't see anybody here, and I have to keep looking here, but it's all good. Funny stage setup. But anyways, at Zero G, we're building the trust layer for AI. We've been doing this since 2023. And effectively, we make AI verifiable, safe, and sovereign as well. And so we've got part of the infrastructure. We've got a blockchain that's a layer 1. We've got about 100,000 agents already transacting on the blockchain. Then we've got a compute network, which provides inference, fine-tuning, storage as well, and then a full application and agent layer as well. So excited to chat.
Okay, so let's set this stage. Michael, why don't we start with you? Where are we in terms of there's a lot going on, right? There's Mythos, FableFi, and the government, and decentralized AI or private AI is having a moment. Where do you see that right now? How does your company fit into that?
Yeah, in general, from a macro perspective, I would say it's very similar to where, let's say, crypto was in 2020 in terms of TradFi versus crypto. The AI industry kind of is ignoring that blockchain and as a whole kind of exists. And if you look at, for example, Palantir's writing about sovereign AI, they don't mention once blockchain as a solution to all these problems. And they actually say that the best solution is on-prem and owning your AI that way. But blockchains actually provide a significantly superior solution because you don't have to be on-prem. You don't have to trust a specific party in this case. On-prem, you still have to trust your own operations to make sure that things are fully sovereign, fully private, and there can be leaks. But crypto actually provides a really interesting answer to that. So you can have verifications and attestations stored on a trustless system and a blockchain-based system, and effectively do the same thing much better, cheaper, more verifiable, and you don't have to trust any party in that. So eventually, I see it as an inevitable event that these industries will merge together, because AI, as the capabilities start growing with, as you're seeing it with Fable and Mythos and so on, that AI agents themselves are going to be sovereign at some point. And then how can we trust these new actors? And so we need new primitives to basically align them with human needs. And if you're just trusting an entity to do that, that could be a very, very dangerous kind of future.
Brian, speaking of trust, can you explain zero knowledge and answer the same question?
Yeah, so zero-knowledge cryptography is a fancy way of saying that you could run any generalized computation through a virtual machine and prove without revealing any underlying information about that computation. It found product market fit with blockchains because it became a part of the Ethereum L2 scaling roadmap, doing computation off-chain and then proving it back to the L1 to settle and inherit security from Ethereum. So that's where we found our product market fit, and that's where we started to develop our business, and that was sort of like phase 1 of Succinct. In 2026, sort of looking at the zeitgeist and trying to understand where crypto might be intersecting with new trends in this space, obviously we couldn't ignore AI. And seeing how part of the zeitgeist was memeing into existence, hey, Grok, is this real, on X and Twitter, right? This idea of a proliferation of very cheap and convincing media that was being produced and distributed through social media. We started to realize that detection was a losing game, and that maybe provenance and proving at the source was something that we could look into through cryptography, through attestations, through ZK, through TEE, through all sorts of cryptographic tools. So that's a little bit about ZK. That's a little bit about how we started to move a little closer towards the AI side of things.
Carl?
Yeah, I mean, we're going to talk, I'm assuming, in this panel about a number of ways where AI and crypto can work together. I think my general point is today there's very little intersection between both that's really working at a high degree in production, or certainly that's being adopted by mainstream. Even like the two largest and most discussed crypto AI companies, which were Noose Research, of course, and Venice, have mainly now pivoted to be AI companies with very little touch points to crypto. But that said, I think both the things that Michael and Brian said, I very much echo and agree with. It's much cheaper. And like when you get an AI output today, you have no idea where the data is sourced from. But if you can understand the provenance of the data, understand what data is trusted, even getting confidence intervals around certain types of data, around how confident the AI is with the answer, like that's where enterprises need to be to start to trust AI in production. My brother's actually leading a lot of the AI efforts at Capital One, and they're still like, it's so hard to get everyone over the line because lawyers ask him, hey, what's the output going to be? And he's like, well, I can't guarantee it's going to be a certain thing. We can put in guardrails in this, but it's not a deterministic system. That's the beauty of it, but also one of the challenges for enterprises. But if you start to build that formally verified data layer, but then also output, I think you really start to get mass adoption. And I think the question is it going to be the big labs that drive all of this, or is there an opportunity for startups and crypto companies and more of a distributed or decentralized approach to make this happen? It's a big opportunity.
Logan, do you want to weigh in on that as an investor?
I'm personally very bearish the overlap of crypto and AI. If you think about what blockchains are actually good for, they're ledgers. The ledgers connect a bunch of different databases around the world, and you do some data or message passing between them. So it's really good for finance, and as they get more performant, they're better for things like trading and payments. I do not see, to kind of touch upon Carl's point, a lot of the blockchains today working very well with AI because most of them are not really actually using blockchain as coordination rails. They're primarily using it just as like a backend database for payments. At best, with VVV, it's quasi-token equity, but it doesn't really need the blockchain to actually make a better product. And I think we've tried to see some examples of the overlap of these two, but most of them, to Carl's point, have pivoted to only AI. And so I'm very bullish each in their own right. I think blockchains are primarily just for finance, trading, and payments. And I'm very bullish AI, but the intersection of them too is extremely limited, and I don't really see that changing.
Michael, I just want to go back to something that you said about Alex Karp and the narrative, and why is it not part of the narrative? Why are they only talking about on-prem or local AI as a solution as opposed to blockchains?
I think it goes back to the history of how AI started versus, let's say, blockchain started. I think AI was very driven by use cases. And so then there was the whole, let's say, kind of crypto bear and bull cycles, and a lot of it was driven by speculation and the promise of something actually working. And AI took the exact opposite approach. And so as a result, I think many people in AI tend to be very kind of bearish on the blockchain approach because of that. That being said, I do see there's a very strong kind of intersection at the truth and trust layer perspective. Because if you look at a bunch of industry leaders, even on the AI side, like Nadella from Microsoft recently said, if you're working with top AI labs like Anthropic or OpenAI, you pay twice. Once for the tokens, and the second time for the know-how that they extract from you. And so if you have a kind of trust layer where you know for certain that my data isn't going to be used to train a model, for example, and I can completely verify it, and it's independently verifiable. I don't have to trust a person. I don't just need like legal recourse to basically say like, okay, well, you told me you're not going to use my data, but I'm prompting the system now, and it's telling me things that are proprietary information that I shared with the system. Now I have to seek legal recourse. Why not just build it into the way the system operates in the first place? And so that's where I think blockchains can really contribute to the AI kind of vision. But again, it's so deeply rooted in the history of how these two industries started growing up that it's going to take a while to really educate people on the AI side as well.
So let's talk about payments. Carl, a part of your thesis is around agentic payments, and we're seeing a lot of usage now in 2026. So where are we with this?
I think we're very early. I would actually say we're not seeing a lot of usage. In my understanding and digging into it a little bit, I was talking to somebody yesterday actually that had a good point of view on this. They are even deeper in the space than I am. And the most popular X402 is the most popular agentic payments protocol that's been adopted. It's being, I don't know if it's pioneered or certainly endorsed by Coinbase and a number of other large institutions, but like the largest the issuer that has the largest transaction volume of X402 payments, there's only like 300 people on the network. So I think agentic payments will be very, very large, but right now agents are mostly in a single player mode. Like I might have an agent, Logan might have an agent, Michael might have an agent. Like our agents usually are not talking to each other. And if they do, it's over existing human speech. It's not some sort of agentic protocol that's super rapid and high efficiency. And so I think until we go from single player to multiplayer agent experiences, there's kind of not really a need for agentic payments. I think most agents today, people would just give them a credit card or a debit card and say, go buy this for me, go do this for me, but it's acting on my behalf and not really interacting as part of an ecosystem. I think when agents start to interact with each other, open rails are by far going to be a better solution than using like closed rail networks. You already have, it's like an open protocol, easy to integrate, millions, if not hundreds of millions of wallets on the network. I think that's where it's going, but it's just too early. We've passed on every single agentic payments protocol we've probably looked at 10 to 15 at this point. I'm sure Logan's probably looked at a similar amount. And it's just, there's no demand yet. And so it seems like you're trying to set up the rails before the demand is even fully there.
Logan?
On payments, I think I'm bullish. I think in the end state, blockchains trend more towards high frequency trading, where you do a lot of throughput. As the blockchains get more performant, they get better at doing essentially equivalent of like what Robinhood and Citadel are doing, which is like national best bidder offer as like best execution. But I think you could use AI, but it's more as like a quant strategy. I don't think the like AI with like even like agents, that was like a narrative in end of 2024 where it was like, all right, I'm going to give my agent some money. It's going to manage this money for me and it's going to do great. I'm like, awesome. If that works, you just made the best quant strategy and they gave it to you for free, where Citadel and HFT firms spend billions of dollars, tens of billions of dollars to build a model and they just give it to you. Like, and if it does work, that alpha is going to be competed away. And so I'm bullish kind of like trading and payments, but I think they're more proprietary where it's just like trading firms build unique things with AI and then they apply that to finance. But I don't think it's uniquely advantaged to like the everyday person outside of maybe like your business can be run with an agent and that agent is managing the back end.
Brian?
Yeah, I think it's a situation where you're getting the sizzle before the steak. Some of the comments from Carl about how many users are actually using X402, you said 300 persons. I would imagine there's some sort of exponential amount of agents that they've deployed each, but yeah, they're all in a sandbox just sort of talking to each other at this time. So I guess it's better to test and learn at this time and truly understand what the technology is good for before deploying anything into mainnet and actually trying to achieve product market fit.
Yeah, and I don't remember the exact numbers, but it was something like 60 million in X402 payments, and there's trillions of stablecoin volume, so it's like a minuscule amount at this point. But it's going to come eventually.
So speaking of stablecoins and agents in the future, will they transact using stablecoins? Is that what you think will happen?
I think if it's on blockchain rails, yes.
I think yes, for sure.
My base case is that all of finance eventually moves on blockchain rails. If you look at kind of total volume today on any blockchain or kind of the more prominent ones, there's about 5 to 10 billion of trading volume. If you look at global equities volume around the world, it's about 800 billion a day. So in like 10 years, I wouldn't be super surprised if blockchains have, call it like $1 trillion in daily trading volume, which would be a pretty big step up from where we are today. But I think you just tokenize assets, equities, derivatives, stablecoin transfers, that all just kind of moves on blockchain rails because it's primarily for finance.
Yeah, 100% agree. There's a reason why Stripe built Tempo, for example. I mean, it's much more efficient as a system long term.
So Michael, why do we need another layer 1 for decentralized AI?
It's always a good question. Why do you need another chain, right? But for AI specifically, you have to be performant enough to handle enough transactions per second. So that's a key aspect. 2, you need to have specific primitives that enable agents to live on your chain. So for example, you need some type of permissionless compute, for example. How do you integrate the kind of core primitives of the blockchain with then permissionless compute? Or if you want some type of memory system as an agent or storage, you also need permissionless storage so that nobody can, for example, block a particular agent. And so it's not just the blockchain itself, it's everything around it that's very important. So that's how we look at it. We look at it more as a full stack, where the blockchain is just one of the components of the full stack.
Does anybody else have a view on that?
I think like the properties of zero knowledge proofs or even HFE, where it's like computing over encrypted data, these techniques that blockchains in large part have created or furthered because of the amount of money that has gone into the various ecosystems, I think are very bullish. You can use zero knowledge proofs or HFE without actually having blockchain rails. You can attest to them and just put it into a database. And so I think the big question in my mind is, if blockchains, in my point of view, are really about synchronizing data globally, where you can opt into a system and that's kind of shared with all the nodes within the set, I don't know if you necessarily need to essentially put AI data on a blockchain rail. I think you can use zero knowledge proofs or HFE just in a database and it's fine.
Yeah, we would agree to that. You don't need to use the blockchain to actually store the data on the blockchain. Like our storage network is completely separate because from a performance standpoint, it doesn't make sense if you have like a multi-hop consensus system. It's better to just have the attestations that everybody can basically review versus just putting it into the blockchain itself. So the blockchain just acts as the kind of truth and verification layer. To give you an example, so let's say I'm a hyper smart agent. This is, let's say, year 2030. Beyond Mythos level intelligence, I can break into any database. I can change a few records, do some deepfake work, and basically say, hey, I've done all this work, now give me my reward. Very hard to do on a blockchain because it's append only, and you can then very quickly verify if something actually happened or not. And so that's really the real value of the blockchain itself.
So we only have a few minutes left, but I want to do a lightning round. So in 5 years' time, where do you see the intersection of AI and blockchains? Is crypto still its standalone category? Carl?
I think in 5 years. So I think there's a difference between distributed networks and decentralized networks. I think so far the success of companies like OpenRouter has shown that distributed networks for inference are highly effective and highly used. I think there's going to be some sort of political or other types of catalysts that actually move people more and more towards a decentralized or like less controlled and censorship resistant approach. So I do think the open routers and the distributed compute networks have out-executed the decentralized ones. But I actually do think over time there's going to be decentralized networks that people do use and do trust and rely on, again, for a variety of political or other access-related reasons. I think agents will be transacting in stablecoins in 5 years. I don't know. I'd be lying if I tried to give you an exact number on that. But at the end of the day, if we haven't transitioned from single-player agents to multiplayer agents in 5 years, I think we've really failed, both as an AI industry and potentially as a crypto industry as well, in actually helping to support and advance that use case. I guess like on the last part, I'd say agentic trading. I mean, I'd say today bots already trade more than humans on chain, and even in the traditional markets. And I expect that's just going to continue. And so I do think people will employ agents to run strategies on their behalf and actually help craft more sophisticated strategies than they would be able to do otherwise. Again, there are the Citadels of the world and the others that have very, very deep, robust, deterministic algorithms. But I find today, I use agents to help create a strategy, and I get much more data and insights than if I was to go try to do it individually. And so I think there's going to be more and more of that over time. And spinning up your own agentic trading agent is going to be core. It's also going to be fun. I think these things are going to be interacting with each other. It's going to be very social, and so I expect there's going to be a huge growth of companies in that space.
Yeah, I would agree with all of that. And starting at the highest level on the topic of decentralization, I think one trend that we've seen and that we'll continue to see is that decentralization is indeed a spectrum. For as reductive as that is, I think we're proving that blockchain rails are just as much about trust assumptions and trust guarantees as it is about composability, as it is about decentralization and permissionlessness. With that, vis-a-vis agents, I think we'll see cryptography, separate from crypto, continue to permeate sort of agentic commerce from the inference level to the training data set level to identity, understanding what agents are authorized to do what by whom, how they were deployed on what models. I think that will be very important, and I think cryptography will have a strong presence within that.
I would echo Carl's sentiments on that. Agents generally, or quant strategies, are mostly automated, and those are largely bots. And so very bullish just on-chain trading being probably less human-dominated and more just algorithmic. I would say on the potential overlap is there were some experiments tried around decentralized trading. I think that has been less proven out. It works, but the thing that we've seen with trading is you just need a lot of compute to actually scale it up to build a frontier model to actually be able to do the inference. If you pull all the kind of NVIDIA GPUs from the 3000 series to the 5000 series, the amount of gigawatts that you get is between 5 to 10 gigawatts. If you look at the most frontier clusters today, they're around a gigawatt. And so if you took all the decentralized inference compute out there from the NVIDIA hardware and potentially built a model, you could build a frontier model. But if you kind of extrapolate forward, I fully expect XAI, OpenAI, Anthropic all to build 10 gigawatt plus clusters, and so I think then they just lose the lead. So potentially you could do something there, not on the training side, but potentially on the inference. But in large part, I think the alpha is to not think of these things as overlapping, as crypto is finance, and go long finance, go long trading volumes, and then go long AI. But the more that you try to overlap them, I think you'll have less money.
Nice. I agree with Carl in the sense that we need to see some major AI safety incident happen, let's say an AI gate, that'll actually drive people towards more decentralized solutions, because then they realize, okay, actually there's a safety approach, there's a verifiability approach, and I don't have to trust any specific party to align my agent for me. So we've written a number of research reports on that. We actually had a decentralized training research report, just as FYI, last year in June, where we, for the first time, trained a 100 billion parameter model. It's basically a big coordination and communication problem, and much easier when you just control everything yourself. But on the safety side, we wrote a paper called Sparse Inference Time Alignment, where effectively we can look on per tokens, and these are AI tokens, not crypto tokens, to see if these are high probability or low probability tokens. Low probability means that they're very risky. That means the particular prompt that you're using is a very risky prompt. And then we can effectively steer that model away towards a higher probability token, and then also have a value-based system encoded into it to keep these models safe. Now, you can implement it directly into a model, or you can have a separate safety layer as well. But that's more of a performance trade-off. So short answer, basically, I think there will be use cases that will drive people towards blockchain adoption in crypto, in AI, sorry.
So we got half bullish, half bearish going on. But big round of thanks to our esteemed panel.